Indian companies selling in the fintech space to international customers?
I mean, the biggest moat is staying out of jail.
Every successful founder has gone to jail at least once.
Governance and compliance being so overbearing that you can't build the product in the first place.
We had to be compliant and to the standards of an HDFC bank, for example.
You have to think compliance day zero. If you are in the space, and that's the cost of doing business.
Month, we are going through at least 4 or 6 audits done by our clients. People who survive will be the winners in the long term.
You guys are directly doing this. We have invested in several companies. And the big second wave of fintech financial services came about with credit, right? So we think about the first 10-15 years, which was largely dominated by payments, and obviously UPI, which we didn't touch upon, but has just been a phenomenal success for the country as a whole. 10-12 billion transactions per month, continuous growth in terms of volume, acceptance. I haven't been to an ATM machine in, I think, 5 years now, right? I think post demonetization, I don't even recognize the currency notes of India anymore because I don't even know what the denominations are. And everywhere from you go park your car and somebody has to, you need to pay a tip, they're generally happier accepting UPI because you probably tip higher than what you would have otherwise. So it has been transformative for several of us. And of course, we've had Bharat Bill Pay and FASTag and things like that, which are now integrated in the malls. So you don't even have to go, and even in the mall, it just bills your FASTag, right? So we've kind of leapfrogged a lot of the developed countries on this one front. And I think that data exhaust and the fact that everybody's got a digital ID and a smartphone has kind of led to the ability to create various forms of lending, whether it is BNPL that at Amazon you guys had launched in the checkout process, whether it is B2B, credit, whether it is, of course, unsecured, secured lending, all of these things for SMEs to consumers and so on. So, but India, still today we say that there is like a $500 billion odd credit gap that's there in India, right? And that gap only continues to grow because people are getting more and more perhaps digital and aspirational, and yet access to credit is still fairly tightly controlled, and a regulator rightly is sort of putting more and more rails around it. So how have you all seen this big boom that has happened, right? And to some extent, what are some of the gaps at a product level that entrepreneurs should be thinking about to dive into? Anshul, do you want to take a first cut at it?
Yeah, sure. So I think I'll talk more from a B2B perspective. I think the gap is primarily in the SME segment, right? SME segment is the segment which is not very well served. I think they're from the demand that they have, if I remember the numbers right, they have like a $600 billion credit requirement, out of which only $250 billion is met, right? So there's a massive credit gap. But the problem with the SME segment continues to remain that it's a smaller ticket size. So you can't really do like a 5 crore loan to SME, right? So smaller ticket size essentially means that the lower revenue. And unless until you have solved the cost of acquisition and underwriting to a fairly large extent, and it is all product led and digital in nature, you can't serve this demand, and you can't, and it will continue to remain unserved. But I think for all the digital infrastructure or the public infrastructure that is now our country is putting in place, right, with A's coming in, with BBPS and the invoice flows, with e-invoice, I think this is going to change massively, right? And I strongly believe that there is a large opportunity for a product-led SME-focused digital lending company which uses all the sort of the public infra now available to digitally underwrite the SME, instantly give a credit line, and and then serve that gap, right? Which is, I strongly believe that very, very hard for banks to do it, right? Like their DNA is not tech, and of course the tech service providers will try to solve that gap. But the problem, I strongly believe, the problem with the tech service providers is that they have their ear on the ground. They are not talking to most of the customers directly. So there is a big gap. The banks listen to them, of course, then they translate it to the tech service provider saying, this is what I need. But it usually does not match. The iterations are slow. Things are, the bank is looking at saying, if I ask for a small change, a new invoice is going to come, right? So that's why I strongly believe that instead of the banks, probably some new age fintech will probably have a better shot at solving this problem. I think that's a good opportunity in the lending space. I believe is still untapped and unsolved.
Yeah. No, and I think obviously we'll bring in a little bit discussion on the regulatory thought process also in a bit. But this debate has started happening now more openly, which is even the fintechs, are you fin or are you tech? Bhavin Torake has been tweeting about it. Others have been talking. We've been discussing this over several years also. I mean, I used to say financial services versus fintech, but broadly the separation of, are you the customer facing service provider that is going to be backing them with the loan, or are you the technology vendor? Your commercial model might be, revenue share or whatever, to the regulated entity, right? Whether it's a bank or an NBFC. And I think these are two different and distinct opportunities. Both could be quite interesting. One thing I think that's different in the whole lending space is, unlike payments, these are not winner takes all opportunities, right? So the fact that somebody has solved a problem and is a successful lender does not mean that another company cannot start and solve exactly the same problem, probably a little better, maybe in a different geographic region, targeting a different subsegment of the customer base, etc. So I think lending to me is kind of like this Akshay Patra, right? It's this gift that keeps on giving from an opportunity perspective, and it's up to entrepreneurs to do that. I think what is becoming clearer is, if you want to be the customer touch point, it's at some point, and ideally sooner rather than later, it's important to get regulated.
Yeah.
Right. I think that has become sort of a clear thing. Now, how you get regulated, is it an NBFC license? Is it in working in partnership with somebody who has a license? These are still challenges, I think, because it's still a little bit of a gray box in terms of how these licenses are evaluated and awarded. But hopefully there will be more clarity on that from the regulator as well, as becomes, because on the one hand, everybody wants to see the progress. On the other hand, if you're going to control it, then it'll be good to have a clarity. In fact, one of our companies, Dozy, in the healthcare space, got FDA 510K approved. And I studied that process a little bit. FDA's process actually has got a 120-day honest commitment. So you apply for a license, they start evaluating the license, your application. At day 63, they may come back and say, here are 70 questions we've got. And then they pause their clock, like, you can think of a chess grandmaster. Now, you might take 2 years to answer those questions. But when you're done, you come back to them, the 63-day clock starts again. Right now, on day 119, they may come back to you with another 400 questions. And when you submit it the next day, they might just reject the application. That's a possibility. But at least there is a sense that, if you have your ducks in a row, there is a finite time frame in which you'll get a confirmation. I wish we would have similar processes here in India, especially with the regulator. But I think, we'll get there, right, at some point. So lending to me always feels like, look, we are such a credit-starved market. I can't think of I can't think of a handful of entities that are going to service this $530 billion gap, which by that time will probably be $1 trillion gap by the time we even get there. So I think there is going to be continuous opportunity, but it's also one where it's not like a get-rich-fast scheme. You have to play within the rules. You have to take your 15 years to build this business. You cannot drive on the shoulder of the road. You have to drive on the road and drive within the lanes. And I think for entrepreneurs who are willing to do that, I think there is still phenomenal opportunity, because the profit pools are huge, right? And I think that's a big thing in India. I'll switch gears a little, and maybe Srikanth, you can talk a little bit about the whole internationalization of the opportunity as well, right? You guys are one of the few companies that has also gone and sold internationally. I know we had done some experiments in Happay, but of course the company exited by the time. So tell us your experiences about Indian companies selling in the fintech space to international customers.
Okay, so I think what we've learned as we went international is we started the typical product way, right? See, are there countries where there is a similar problem of data being in all different places, the need to aggregate it and classify it and bring it together in one form and manner? That actually was the easy part, right? Even in some of these Middle East countries where the bank statements are in Arabic, the product worked, right? What we figured out and what we learned through experience was that you need very, very strong local partnerships for two reasons. Partners who understand the regulatory environment there and are able to guide you in a way that is compliant and also meets the regulators' requirements. And of course has a lot of go-to-market advantages. One of the biggest costs that you realize when you go to a different market with a B2B SaaS product is really GTM. Right? In our experience, we invested in an international team about 3 to 4 years back. That team has grown significantly, and we're seeing significant revenue starting now. Right? So there is anyway a 3 to 4 year lead time between the time that you say, yes, I want to press the button on international, and then you find the right team, the right partnerships, the right kind of product partnerships. Revenues come 3 to 4 years down the line. So if somebody is going international, the first word of advice I would have is have a lot of patience. Choose your adjacent markets well and get the right partnerships in place.
Got it. And in terms of monetizability, right? I mean, of course, there are several countries where India, we are blessed with the software talent and the scale that we've been able to bring these products to be really robust and thing. How should one think? I mean, yes, the number of customers is probably fewer, and there is a lead time to get started. But after that, does it go well? Does it scale up? Is it worth it, right, from an investment perspective, in terms of on an ARPU basis?
Oh, definitely. I mean, the arithmetic works out both from an ARPU perspective and the roadmap to growing that adoption. I mean, typically you start with 1 or 2 products per customer, and then build from there and deepen further and further into the workflows. So the trick really is, once you've acquired a customer, and this is like basics, right? I mean, once you've acquired a customer, an enterprise customer, can you sell in 3, 4, 5 products for that customer so that you monetize your CAC far better, right? So I think the game in markets where there are fewer customers than what we're typically used to in India is to deepen. Is to go deeper and deeper and find use cases that you never imagined would have existed. And that goes back to the point of, trying and find the right partners who can be in the customer's face, week in and week out and make this happen. So yes, absolutely. From an investment thesis perspective, definitely worth it, provided the right, product outlook, the GTM and patience.
So I'll maybe couple more topics, we can keep going on and on, but there's, I think this will be a couple of good things to cover. Maybe I'll start first with you, talk about this whole Data Privacy Act, and
sure.
Maybe Anshul, you can give some closing thoughts on the role of AI and artificial intelligence in fintech and, some of the things coming up. So, data, I mean, you're in the data business, or you're certainly managing a lot of data for your enterprise customers who have their customers. And India has, of course, now come out with the Data Privacy Act, and it's going to have. I mean, now you're sort of going to have 2, maybe 3 regulators, right? I mean, as the company scales, will also potentially have a public listing, and companies have to prepare from that perspective. Of course, all your customers are probably regulated by the Reserve Bank or the equivalent RBI equivalent in other geographies. You have to help them with that. And then overall, data privacy in various shapes. India has its act, but others, there's GDPR, they have European customers and so on. So from a technology infrastructure company perspective, when does all of that start thinking about all of these? Because you can't have governance and compliance being so overbearing that you can't build the product in the first place. Because that's what a nimble, fleet-footed startup is supposed to do. So for entrepreneurs who are listening in, maybe from your experiences, the Perfios journey, you can share some insights here.
It's actually, it's a great question in terms of what you put first, right? Whether by design or by accident, the fact that we were serving the SBIs, HDFCs and Bajajs of the world, that automatically raised the bar for us on compliance and data security and data destruction. You could go into 20 different rabbit holes on that one. But the underlying theme for us was day one, we had to be compliant and to the standards of an HDFC bank, for example. Right? And all the banks that we deal with have some of the highest standards and requirements of vendors in passing the sniff test on data security, separation of data systems. I mean, when you serve about 80 or 100 clients in the country itself, just keeping that data separate itself is its own, design and architectural challenge. And this is a continuous process. Every month, we are going through at least 4 or 6 audits done by our clients as part of their systems audit and part of their compliance audit. So I think in hindsight, we've been blessed that we started with that mindset, saying compliance first, and make sure that your clients who depend on you are able to meet their regulatory standards while still working with you. In hindsight, that has actually, solved a lot of problems for us and made us future ready. But having said that, it's not a solved problem. It's no way a static problem. One of the things that the DPDPA draws a clean line between is a fiduciary and a processor, right? If you're a bank forget bank. If you're a business who determines what data is collected, how it is processed, and how it's going to be stored, then you're the fiduciary, right? In our example, it is a bank or an NBFC. But if you're a processor or a TSP in the parlance, or technology service provider, who processes this data on the clear instructions and contracts and safeguards with the client, then you're a processor. The DPDPA applies directly to the fiduciary, and it's the fiduciary's job to make sure that their downstream TSP agreements or processor agreements are in line with it, right? So if you're starting a business today, which is going to serve enterprise or even mid-market financial services customers, I think the day to start thinking about compliance was yesterday. Today we'll have to do.
Yeah.
Right? And I don't mean this facetiously, because if you look at some of the signals that we're getting over the last few months, the message from the regulators is very clear that we are absolutely want the market to expand and innovate, but do so in a way that doesn't jeopardize a customer or the financial stability of the ecosystem, because that would be a very, very poor outcome, right? So I think let's learn from mistakes that we made in the past, either in exuberance or in maybe people didn't know, like to your point, that we later realized 2 days before launch ki ye regulated businesses, right? I think those accidents
better
are
than 2 days after launch for this.
There you go. So from an investor perspective, I think what you will want to look out for is this will have a kind of a Darwinian impact on people in the industry. The cost of compliance is going to go up, definitely. But what that will mean is that people who survive will be the winners in the long term. Right? There will be a natural attrition of people who either don't have or don't want to invest that much into staying compliant and building these systems. So I think the net outcome is going to be positive.
Super. Yeah, I think that will also create opportunities.
So
right?
I think the answer is day zero, Sanjay. I think you have to think compliance day zero. If you are in the space, and that's the cost of doing business. Because unfortunately, whether you serve to the bank as a TSP or basically you are whether a tech fin or fintech, right, to your context, right? So doesn't matter. The compliance has to be there on day zero. You literally can't tell the regulator or a bank partner or anyone saying, let the volume scale and then we'll figure out the compliances.
I think I generally look at regulation always and say, look, regulations are black and white.
Yeah.
If it's not stated, it's black, right? So this example of, using a prepaid card to lend on it, for example, right? That's an example of, it's called a prepaid card for a reason.
For a reason.
Just because it doesn't say you can't lend on it doesn't mean you could, right? And I think that is where, some companies unfortunately got caught on the wrong side of the quote unquote gray area, right? And whereas if you take the ultra conservative approach, now sometimes you can get left behind, and I think that is a risk that startups will have, but it's not a formula for success for sure, right? And I think one needs to be always sort of vigilant on that, and that is also what creates the moats for the startup.
Absolutely. I mean, and on a lighter vein, I mean, the biggest moat is staying out of jail.
Although jail can be a moat in itself for this. If you go to Alcatraz. Bala once told me that every successful founder has gone to jail at least once. So if you've gone to jail, then I think that's a good thing. At least the chances of
we don't have any founders like that here. So, Anshul, I think last big topic maybe to discuss, and given your tech roots in particular, so much is happening in the AI space, particularly the last 12-18 months on the whole GenAI side of things. And from a fintech financial services space where, you have to be fair to your customers, a lot of ethical issues also that come about in terms of granting underwriting a loan and stuff. So I've generally looked and said, look, anything in the scaffolding, which is around customer service, around this, around that, I think a lot can be done, and that's sort of the low-hanging fruit. But anything that's in the core of this is still, I think, jury's out as to when one can, and there's probably regulatory questions that will come up. So, what are you seeing? What is exciting you about the recent trends in AI, and where do you see opportunities here?
One thing that I think could work in the PFM space, right? For example, if I have, let's say, invested in a certain type of stocks, right? And you would not have time really to understand their earnings call, any news that is out there in the market for your portfolio that could impact any new policy change, right? Could there be a product that would actually summarize the earnings call, any new news that has come, which could impact my portfolio or any new policy change, and create a very summarized version and give it to me to read, for me to understand how it will potentially impact my portfolio? Should I take? I'm not sure of now going a step further to suggest whether you should basically exit from this position or continue to hold. That I'm not sure whether the current set of AI would help, but definitely it would help you to consume all that massive data or massive content which is related to your existing set of investments. I think that could be exciting in my opinion.
Talking about exiting positions. I'm just kidding. So, for the audience, Happay is, one of our firstborn investments, and, really happy outcome out of Happay, pun intended, with exit to CRED, and we're still part shareholders now in CRED. So, coming back to maybe a few, closing questions, closing thoughts, right, in terms of where you see like real opportunities these days. If there was one thing you would tell an entrepreneur, from your lessons, perhaps we can start with that. What would your one message to them be other than saying go to Prime for funding?
One lesson that I would definitely say, look, if you are operating in a regulated space, you better be the regulated entity yourself. Instead of sitting on the fence and said, look, I will partner, and not be the regulated entity myself. I'd say I think regulator has very clearly shown their intent, saying, if you really want to scale any financial services business, you better come and get regulated. There's a risk to it also from an industry perspective, that if the regulator is not fast enough in giving these licenses, then a lot of innovation will get impacted. right? And the industry, the way the whole industry has grown over the last, I would say, 10 years or so, right? And the rate of innovation will go down drastically. But I would definitely say someone operating in the financial services space, right? You please figure out the regulations first and what is the model that is kosher with the regulator instead of just jumping right into it.
Small variation I have on that is, while all that has to be done, you may get started through partnerships, but be very clear from the beginning, and in fact put in the application of the regulator, so that the regulator also is comforted that, okay, you intend to get regulated, right? So that would be sort of a variation.
I think if you're thinking,
just so that you don't lose time.
Sure. If you're thinking on day zero, right, I think, there is always a path to reach to that, right? But I think you must think about that on day zero for sure, in my opinion.
I may just add to that. You should look at the RBI website and look at specifically what is called a sandbox environment.
Yeah.
Actively, this is the second or the third cohort that the RBI has opened up. Applications are open till, I think, 6th of April. I might have the dates wrong. But if you're an entrepreneur, you want to get started in the regulated space, and you don't know yet where the limits are on the regulation, go and put your hand up for that sandbox environment. The version 1 was a trial even for the RBI. Their feedback was there is a lot of innovation that's happening that is going, under the radar that we should actually benefit from. Let us ring fence the risk from any non-compliance in the sandbox environment. Put these things in place and then let you become a regulated entity. So there is not just a partnership, but also a quasi-regulated way to get started, just to validate your business and, be on the right side of the regulator.
Great. Any other, message from your side? This you're building on Anshul's, for entrepreneurs.
My simplest request or advice to startup founders: learn to sell. It's a learnable skill. Just learn to sell. You might be the best techie, the best product guy on the planet. That's necessary, not sufficient. Learn to sell.
Terrific. So maybe one last round of some rapid fire questions. Starting with you, Srikanth. Favorite book?
How many of them? But the most recent one that I read that I really took away a lot was this book by Atomic Habits. Brilliant book. It's like, just open this thing. And the sequel to that is a book called Hidden Potential. Just recently came out. Totally enjoyed reading them.
Anshul?
Mine is Hard Thing About Hard Things. I think
Glutton for punishment.
When you read after a journey and read how, and you're able to relate with that a lot, right? And then and then you realize that you're not alone, right? Like every founder goes through some really hard stuff in the entire journey, right? I think this is really my favorite one.
Suffering has many friends. Any favorite cricketer? You used to be a big cricket fan earlier on.
Yeah, I love Virat Kohli. I think the aggression and commitment to the game, right, is beautiful, right? And
extraordinary role model.
Extraordinary.
Sure. I have my views around him, but certainly as a cricketer, it's just phenomenal. Off the charts, extraordinary. Yes. Question. How about you?
Favorite cricketer, or can I expand it to favorite sports? Lewis Hamilton, a guy who came with zero privileges, no base to start with. His father was holding down 3 jobs to put him through the paces as a motorsport racer. It's a very expensive sport. And just through his hard work and his talent, he's reached where he is. It's usually, Formula One, if you follow the sport, is a rich white man's sport. And it's the one guy who's broken through.
Privileged.
Yep.
Born in privileged households, I guess, right? That's historically. And then favorite movie, most inspiring movie, perhaps. What movie would you take your team to, your management team?
Oh. I don't know. I think we'll make our own movie.
Awesome. Anshul?
I'm not really a movie buff. I don't watch so many movies, but...
But if you force the answer, personally, Diwar. Okay. Very old, very this thing, but what a movie.
I think the movie that's a all-time favorite at Prime from a work perspective is Moneyball. We're firm believers. I think there's a lot of potential in people that can be uncovered, and we love founders who have not yet been sort of who've not yet realized their full potential for everyone to know, and that's where we see real opportunity at least.
Nice.
Great. Srikanth and Anshul, thank you so much. It's been wonderful having you on the show. I'm sure our audience will have a lot of interesting and deep insights to take away from it. And if you're the audience, we'd love to hear your insights, your takeaways, and any comments we can for next time. Cheers.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.